Hey everyone, welcome back to Corporate Decoder. Today K.F.I.I just filed an 8K about a delisting notice, and I am seeing one red flag that matters. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is facing a serious warning from Nasdaq, and it could mean big changes for shareholders. So what is happening here is that KFIi, which is K&F Growth Acquisition Corp, through it has received a notification from Nasdaq, the stock exchange where it is listed. This isn't good news because Nasdaq is telling them they are not meeting one of the basic rules for staying listed. Specifically, they've been told they are not in compliance with a rule that requires companies to have at least 400 shareholders. This is often called the minimum total holders requirement. Think of it like a minimum number of people who need to own a piece of the company for it to stay listed on the main board of the Nasdaq. This notice came in on the 19th of August 2026. Now the good news, if you can call it that, is that this notice is just a notification of a problem, not an immediate kickoff from the exchange. So as of right now, their stock, which trades under the symbol KFI, will continue to trade on the Nasdaq Global Market. The company has been given 45 days to come up with a plan to fix this shareholder count issue. If Nasdaq likes their plan, they might get up to 180 days, which is about 6 months to actually show they have met the requirement. If Nasdaq does not accept their plan, the company can try to appeal this decision to a Nasdaq hearings panel. KFI is looking at its options, which include trying to get more shareholders, or possibly moving its listing to a different part of Nasdaq called the Nasdaq Capital Market. This is a less stringent market, but it is still a step down. Let's take a look at the company itself. KFIi is a special kind of company called a Special Purpose Acquisition Company, or SPAC. These companies are essentially shell companies that raise money through an IPO with the sole purpose of acquiring another business. They often have a deadline to find a target company to merge with, otherwise they have to return the money to investors. Currently, KFIiU, the units of the company, has a market capitalization of around $276 million, and its stock price has been trading in the $10 to $12 range over the last year. This delisting notice is a significant event for any company, especially for a SPAC that is still trying to establish itself or find a merger target. The fact that they are struggling to maintain the minimum number of shareholders suggests a few things. It could mean that many investors have lost confidence and sold their shares, or that the company has not been successful in attracting and retaining a broad base of retail and institutional investors. For a SPAC, a low shareholder count can be particularly problematic as it signals a lack of broad market interest, which is crucial for any future capital raises or mergers. The risk I am watching is whether KFI can effectively implement a plan to increase its shareholder base within the given timeframe, or if this notice is a precursor to a more severe outcome, like a delisting. The comparable here is many SPACs that fail to meet listing requirements often see their stock prices drop significantly before or after delisting. For instance, some SPACs that have gone through similar issues have seen their stock values decline by over 50% in the months following such notices, especially if they do not find a viable merger. A hypothetical $1,000 investment in a company facing such a situation could potentially fall to $500 or less depending on the market reaction and the company's ability to rectify the situation. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.